Hey traders, welcome back to our channel. I'm Kenya with BK Trading Academy, where we help new and struggling traders learn how to trade with structure and guidance so that you guys start the right way, you have a breakthrough, and you trade with confidence. In today's video, we are diving into the world of backtesting, specifically with price action channel strategy. So if you are a student in our academy, you are very familiar with this system. We also have a lot of traders around the world who are a little bit advanced in their trading and they use some of our systems, but they may not be a student in the academy. So this is going to help you. I'm going to show you how to manually backtest this strategy, also what to look for and what you should be journaling in the process. So let's go ahead and get started.
Yeah, I know I got problems and I don't know where to go. I don't want to put the blame on you.
The first thing we need to do is break down the rules of the strategy. So when you are buying in the market, you are going to make sure that you have an ascending channel with at least 2 higher highs and 2 higher lows. We identify key levels, preferably on the daily, weekly time frame, but you can also move down to your 4-hour and identify them there as well. But I always recommend daily, weekly. Even as an intraday trader, scalper, you want to find those best technical levels. You want to move down to your time frame that you trade, and you want to wait for a swing low to fail or reach the bottom of your channel. This is if you're buying because you want to buy at a higher low, not a higher high. Additional confirmations that you can use include flag patterns and also Fibonacci retracement. So let's go ahead and look at an example. I'm going to show you how you would navigate this from start to finish. And one important thing is that you want to make sure that you are back testing the time that you trade every single day. So if I trade the open of New York session, I definitely want to make sure that I'm on that particular hour because I want to see how price moves during that time. Now we're going to use TradingView's recorded playback feature to do our back testing. So let's go ahead and go to the charts. Presently, I'm on the weekly time frame of Euro NZD. So right now you can see on this particular time frame, if I ask you if the trend was up or down, what would you say? So there's a few things that we can look at here, and always make this very easy by following the market structure of any price action that you see. So previously we can see that we were in an uptrend, and we can just identify the highs and lows of this uptrend. I'm going to bring this out just a little bit because I can see here that as price was rising, we actually had a retest here and an eventual break of this uptrend. So this uptrend was broken by the low at 1.7526, and then price started to rise again. However, notice that we didn't get a new high compared to our previous high. So this was an indication that possibly the trend was going to change, at least in the short term. So then we have a high, we have a low, we have a lower high, and we have slightly a lower low. Now we have another lower high, but we didn't get a new low here. Instead, we got a double bottom here on our weekly time frame, and then price started to make higher highs and higher lows again. So notice that we have a low, a double bottom here, and this is right at around 1.7446, and then the price started to rise. We broke resistance at 1.7934. That resistance became our support in the uptrend, and then we are continuing to see this rise. Now this is from a weekly perspective. So if we were swing trading, we could have analyzed this from the weekly, possibly even the monthly time frame to find our potential opportunities. So for example, if I were looking at this from a weekly perspective, I would be looking at this area right here, this neckline of the double bottom, because if price breaks above this neckline, I would expect for it to come back and retest the area. Let's just do a replay feature. So all you do is click on replay on TradingView. You're going to click where you want to start the actual replay. So I'm just going to click here, and now you'll notice that price was rising. We had a double wick rejection, and it's a bit tricky when you see patterns like this. You have to be really cautious because although you see a double wick rejection, we know that price can break through this area. So you have to decide where is it smart to place your stop loss. You also want to be looking at fundamental reports that could impact your analysis. So when you are back testing, that is something very important you need to consider, is what fundamentals could have impacted the outcome of your trade. So now that we have a level above price, we're also going to put a level below price because we don't know if this is going to continue higher or if it's going to continue lower. But let's go ahead and clone this area. And then let's say that we've been watching this pair for maybe 24 hours, and then we see something like this happen. So we're going to go ahead and play the live play feature. So now we can see that price is breaking through. So look at that. We got a breakout, right? If you would have sold here, then you very much so probably would have hit your stop loss, okay? But when you see patterns patterns like this, be cautious in shorting, especially once prices come back maybe 2 or 3 times, even 4. You want to be very cautious in shorting when you see patterns like this, because very likely this could go on to complete the pattern, which is usually what happens in a double bottom or a double top. So now that we see this, okay, we might be pushing upward. Now what we want to see is a pullback into this area. Now that my resistance will potentially become support, I'm going to be looking for a buy right around this area. So what I'm going to do is play this a little bit more and we see what happens. So now we have a level below price, and I'm going to go ahead and mark a level above price. So let's say that we found the price action when it was like this, or maybe we didn't want to trade because we thought that it was going to break this weekly level. So let's say that it has broken the weekly level, and now we are wanting to backtest this. So I'm simply going to clone this horizontal zone, and this is going to be my resistance zone. Now, why did I bring my resistance zone here? The reason why I bought my resistance zone here, because this is the nearest major resistance that I see where price moves significantly from the area. So when you're looking at your levels, you definitely want to choose levels where price moves significantly from the area. So if price is rising, I look left to see exactly possibly where could there be a bounce. Now I do see an area right here at 1.8071. So definitely price could have bounced from here. And then what could have happened is that we will get a pullback from this area and then possibly more rise. So let's see exactly if that happened or not. And let's say if we wanted to trade it, right? I'm going to be mindful that this is a reversal area. And what I'm going to do is drop down to the time frame that I trade. So let's say I'm a short-term swing trader and I want to find a swing opportunity on the daily time frame. Now, I can apply this same analysis as a short-term swing trader, but I could also apply it as an intraday trader. So let me show you exactly what I do. I go down to the daily as a swing trader. And what I'm going to do is wait for price to come back to this level that I've marked up. Notice here how on the daily I have an uptrend, okay? And I'm just going to bring my trend line out just a little bit. I already see that price is making higher highs and higher lows. I'm going to just bring my trend line out a little bit. One of the things that we like to use for confluence with the channel strategy is a 50-period moving average. So price is above my 50-period moving average. I want to see that it comes back to this area of previous resistance and it becomes my support right off of the trend line support, and then I can take a buy off of that area. Now, I can lean my stop loss outside of the channel or below the 50-period moving average, which is what we have established in the guide. So now let's just go ahead and play this. Remember, when you drop down to the time frame that you trade, you want to capture your price action inside of a channel. Since I want to buy with the daily trend, I'm going to wait for price to come down into this zone, and I'm going to watch how price reacts. So what I would do is set an alert right at this level at 1.7844, and I'd be ready to execute once price comes to the area. So what you want to do in your back testing is you want to identify in your journal exactly what you see. We're going to put March 29th is when we observe this, to like the 8-hour or the 4-hour if you want to be a little bit more precise. This is 6 o'clock my time, which is 9 a.m. EST. So I'm going to mark that and then I'm going to go ahead and play it. So if price comes within this zone, this is where I'm looking to execute my entry right within these reversal areas. I want to see that it wicks off the 8-hour intraday, and I'm going to put that inside of my journal. These are the steps you want to go through in your back testing every single time. If price went outside of the channel where you were looking to execute either a swing trade or an intraday trade, you're going to put that. How many pips did it depart outside of the channel so that you can see on average how often do you hit a stop loss and what is the average of that stop loss. That can help you improve your entry, also help you improve your stop loss placement and all those pertinent details that you need to know. So let's go ahead and finish playing this and let's see how the trade played out. So price is coming down, it's gone up a little bit, and now you can see that price went right to my area and it turned around. Look, now price did break out of the channel that I have right here, but what you need to keep in mind is that oftentimes you're going to need to readjust your channel. So you can see on this 8-hour, I have an uptrend, but the uptrend has not been broken in my opinion. So I'm just going to move my trend line out a little bit like that. I'm just going to adjust my trend lines a bit. I'm not forcing the trend lines the way I want them. I'm just capturing the price action inside of a channel. And because I'm focused on the reversal point of right in this area at 1.78, like 34, notice that this is right where price came to and turned around. So on the intraday, I would have taken a buy right off of this area. I could have put my stop loss outside of the channel and I would have taken profit in the middle of the channel, which is the rule for this particular strategy. Now let's switch to the daily time frame. Let's say if we got a setup off the daily. This is where price was right here. So we're just going to do another replay feature. We're going to click on replay. We're going to go ahead and just click where we want to start that replay. Let's say we're looking for a buy opportunity on the daily. We're waiting for price to come into our zone. What we want to see is that price stays above the 50-period moving average. We want to see that it stays inside of our channel and that it bounces somewhere in this area, just like it did previously, to give us a buy opportunity. So here you have very strong resistance, which also served as resistance in the future. And we want to see that possibly this will become an area of support. So now let's play it and see what happens. I'm going to set an alert for my trade to possibly enter somewhere around here, like 78.16 maybe. I need to wait for price to get to the area. And now you can see exactly what happened. So one thing you want to always do when you are planning for your trades, wherever you plan to enter, you want to set your alert a little bit higher or below that so that you can be notified before the price actually reaches the area. Because sometimes, as you can see, like we have a rejected resistance here at 1.7823. So if we wanted to enter at 1.7823, it actually didn't get there. It started to wick in the zone right at around 1.7850. So that is something you want to keep in mind. So the nice thing about this is that it did play out according to our rules on this daily time frame. Within the first 24 hours, price did reach the middle of the channel. So you would journal this inside of your journal. You were able to capture 122 pips. And if you would have placed your stop loss outside of the channel and below the 50-period moving average, that would have been sufficient. So let's say you saw price wicking in this area, you decide to drop your stop about 66 pips below the actual channel line. What you can do is widen your stop loss, lower your lot size so that you have an advantage. That way that if price were to come down and wick a little bit lower, somewhere near like another 40 pips down. So that's where we like to teach you guys to strategically place your stop loss so that you have options when the price goes against you. So if you were to risk, for example, a total of maybe 66 pips to make 165 pips at the middle of the channel, that would have been a very positive trade, giving you definitely a 1-2 ratio. So that is pretty much how you backtest. And I've given you an example of just applying it from the daily. You would do this on every single time frame. Now, let's say if you had a particular opportunity that didn't work out. I'm going to walk you through a setup that doesn't go according to plan and that you know how to backtest that or know what to look for. All right, so now I'm going to show you an opportunity that didn't work out. And I'm going to point out an important perspective that you want to keep in mind when you are trading. So if we are looking at GBP USD right now on the daily and we want to find an intraday opportunity, let's say, for example, the price was, I'm going to do a replay feature, and let's say the price was right here. Okay, so we see that price has been dropping and it came to 1.2304 and rejected. And if we look left, this was also an area of previous resistance. Now, because this is in a downtrend on the daily, we want to be very careful because we will be trading against the daily trend. So preferably, we want to be trading with the overall daily trend. If we see that we have a downtrend on the daily, we want to preferably be shorting on the lower time frame. However, a lot of times you are going to have a downtrend on the daily and you may have an uptrend on your intraday time frame, and that's completely fine. Just remember that you want to trade the direction preferably of the daily trend to trade with the overall trend. Now, what if I thought by looking at this, I'm going to find an area of resistance. I see that price is in correction right now, but I feel that I want to find an opportunity to short. This is where I really like to use the 50-period moving average, and I also kind of have a different perspective than most traders. So you probably would have looked at this area right here and thought that this was a good opportunity because it's previous daily resistance. You can also bring this zone to the left and you'll see that you had an area of support as well. However, what I'm looking at is that over the past week and a half or so, the price has dropped a mighty long way without printing any significant bullish candles or a correction. So what I mean by that is from this high at 1.2705, if I move my ruler down, so 1, 2, 3, 4, 5, 6, 7, 8, 9 days, price dropped 396 pips. And each time it tried to pull up, look how much it pulled up. This can be pretty significant on the daily, but let's just measure this first bullish candle. That pulled up about 64 pips. This candle pulled up about 61 pips. So when I see something like this, I know that a nice correction is going to come. But because of how much it's dropped, I need price to come up a little bit higher in order for me to feel like I'm getting a good deal. So this would not have been an area that I would be interested in, but let me show you where I would short. So I'm going to clone this and I'm going to bring this right about here. And this is an area that I would short. Now, one of the things I could have done is gone to the weekly and I could have looked at this weekly impulse. You see how for 2 weeks price dropped, and you can see that price was previously moving sideways here on the weekly. So when price created the impulse to the downside, I can then measure the retracement of that impulse to give me an idea of where I want to take my next opportunity. So if I take my Fibonacci retracement tool, measure where this impulse started to where it ended, I want to see at least a 50% to 618 fib retracement, which would put this right at this first box right here. So I'm going to delete this. But remember, we all see support and resistance very differently. So another trader who is not as experienced or who doesn't really maybe execute the way a professional trader with more experience would have considered an entry somewhere around this first area, which is 124.63. So let's go with that area first, because I can see that this is where a lot of people would have gotten stopped out. And now let's just pretend that we have our levels marked. We're going to put a level above price and a level below price, because we're telling ourselves if price gets back to this area, this is where we want to make a trading decision. Now that we have our levels, we're going to set an alert. And once we get the alert, we're going to go down to the time frame that we trade. So if it's the 4 hour, this is going to be your opportunity on the 4 hour. So notice that you have a downtrend. You would have captured this inside of a channel. And then you're going to make sure that you have 2 swing highs and 2 swing lows. I'm going to take this and look, we have a swing here. We have another swing low here. And this one is not quite touching, and that's okay. We have a swing high here and we have another touch here. In hindsight, this looks great. This looks like, okay, we might have a good opportunity off the 4 hour. Now, keep in mind, for an intraday trader, what you want to see is that price stays below your 50 period moving average. Now, look how we slightly crossed above it. So that would tell me there's a heads up. We might move a little bit higher, but there's a possibility I could take this to the middle of the channel. So let's say that we journaled this. We're going to put exactly what we see on the daily time frame. So what do we have? We have a daily trend. We have a daily bearish trend. Price is currently in retracement from dropping over 300 pips or so in the last 2 weeks. We believe that price is going to pivot right at around 1.2481 or so, or right before then. If we are wrong, we are going to place our stop loss outside of the resistance. What I actually like to do oftentimes is, because price will often wick, if this is an area where you expect price to turn, I don't like to put my stop loss near those areas. So instead, I like to add another position, put my stop loss above that, because most traders are going to put their stop loss right above structure. So I like to put more positions where most traders will put their stop loss. That tends to work in my favor because I've journaled it to see my advantage. So let's say if we had an entry between, we'll say 1.2456 to about 1.2490, and then we're going to put our stop loss above that. So I'll put another entry, maybe like 30 pips up, because it could wick right off of this area, and then I'll put my stop loss above that. So maybe I'll put my stop loss at like 1.2531. Now we're going to play the replay. We want to make sure that we are back testing during the time that we trade. So again, if I trade market open, it's 6 o'clock my time. That's an hour after New York session opens. One thing that I do see is that GBP USD has already made its move for the day. So in the past 4 hours, it has broken out to the upside. So we probably had some news that bought it to this area. Now let's see what happens. So I'm going to go ahead and play it. One thing that we see is that price did not move to the middle of the channel. It actually came down just a little bit. So if we had shorted anywhere right here at the top of the channel, we would have gotten roughly about, maybe I would say 36 pips. Now that could have been a positive intraday trade. Typically we look to take profit in the middle of the channel. So that would have been right about here, but that's about 63 pips. You normally want to go for about maybe 40 to 60 pips on an intraday trade. Let's continue to play this out. And this is where you would take pictures of this. You would put the date. You would also put the time that you traded. So 6 a.m. your time on the 23rd of April. You're going to go to an economic calendar and see if there was any type of news events during that time that could have impacted this trade. And you're going to put all of that in your journal. Now I'm going to keep playing this, and I'm going to note exactly what happened in my journal. Price went to 1.2568, and that is above our stop loss. The good news is, on this particular setup, we would have gotten at least 30 pips, but what we need to check is if any fundamental news reports impacted the outcome of your trade, because what you're going to find is you're going to have a sample of trades where it worked under just normal market conditions, and then you're going to have maybe a small sample that didn't work out during high impact news. Those are things you want to note inside of your journal so that you can see what typically happens. Maybe you want to stay out of the market during high impact news because you notice that you have a higher winning percentage when you are trading outside of those type of market conditions. So this is how you backtest. I hope that this is helpful for you. Remember, the same rules that I did for buys, you can actually do for sales as well. If you are checking sales, you're just going to make sure that you follow the rules of the price action challenge strategy. You want to find your trend, find your level, find your signal. You remember you do the replay feature, before price would have reached that area, and you're going to journal exactly what happened. And that's how you are going to backtest the price action channel strategy. Remember, when price gets to the area, you want to see wick failure. You want to see a potential flag pattern. Like I showed you with Euro NZD, it developed a bullish flag pattern after moving to the upside. So that would have been another confluence. You also could have used your Fibonacci retracement tool, measuring the pullback of that move to help you also become confident in taking the trade. So I hope that you found this helpful. Comment below if you have any questions or if you'd like to see more backtesting examples. Let me know what you're struggling with. But for the students, you guys know we hold your hand through everything that you need help with. All you have to do is speak up and let us know. So I hope that you found this helpful. I will see you guys in the next video. Be sure to smash the like button for me because it really helps to push this out into the YouTube algorithm, and more traders will be able to find this just like you. And hopefully we can continue to grow together. So let me know what else you want to see, what else you need help with. And if you are a new or struggling trader, we welcome you to join us in our amazing community and come and master the systems and everything that we have in place for you, especially risk management, which is going to help you win. We'll see you in the inside.
Yeah, I know I got problems, and I don't know where to go. I don't wanna put the blame on you.